folks. This is the Hot Sheets, and welcome. Well, I guess here we go. And kind of what I want to say about the market, I'm still getting the same basic conversation that I've been getting for the last couple of years. Market's not that great. House prices are going down. And, well, I'm an economist, and I'm looking at data, and I'm just not seeing that. I'm just not seeing that. From the peak of pricing in most communities, well, I shouldn't say in most communities, I say in the aggregate, prices have fallen about 15% from the peak of price acceleration. Now, in any community, I can show you any number of different numbers. I can show you different home segments, older homes, newer homes, and show you different numbers in the aggregate, down about 15% from peak. And that happened last year. And from there, I have not seen further down pricing. I've seen flat pricing and unit volume returning to very strong levels. What do I call strong? I want to be clear because I'm getting questions on this. Richard, we're way down in unit volume. No, we're not. Presentism is locking in on the most recent event that you remember and thinking that was the only events that have ever occurred. In the early part of 2020, the unit volume was normal and healthy, like it was in 2019, like it was in 2018, like it was in 2017. Consistent. We had a good market. Nobody was complaining. And in the middle of 2020, we had a spike in unit sales of single-family homes on 30A that was, to be candid, a bit on the crazy side. It just was. And for about, well, let's call it 18 months, more or less, we had crazy volume. And it very quickly went down to very low levels, below anything that had been previously normal up until the early part of 2020. And I am telling you, I'm looking at the data. I'm not just putting my finger in the air and saying what I think. I'm saying what I know. Unit volume has returned to early 2020 levels, which were good. And it's showing signs of pacing over time the way that many of us were used to. Take that for what you want to take it for. It doesn't mean that prices are going to rise just yet, because the seller mindset probably is still on average to kind of let the properties go because you want to make a change. And the returns are not as good for rental properties. That's just reality. Prices up a ton, rentals behaving well, but not as good as they did. Financing rates having been higher, insurance rates having gone up with inflation, as did taxes. And so some people are wanting to reallocate money. And so those sales are still occurring in the background. But my goodness, great homes. Wow. Like 215 Dogwood that'll be on the market here in just a minute. A beautiful home that people are just going to love and have a life in it. Those homes are selling too, and they're selling at very strong prices. Alys Beach is doing great. WaterColor is really stabilized, and we're seeing signs that prices are beginning to moderately rise again. Let's talk the unit volume, though. In April of last year, as I've said several times, 76 homes sold last year. This year, we are on pace to hit 80 with absolute certainty. I'm guessing there's 6 that I don't know about in the private market. I don't know of any of them myself. And so I think we're going to close 86 homes in the aggregate on 30A this month of April, against a closing inventory level of probably around 680 for an absorption rate of 7.9 months of supply. That's reasonably normal for this market. If you go back and look historically, the 6-month benchmark has never been the benchmark for buyer's market or seller's market. It just never has been. It's a little bit wider of a range. We'll go down to 4 months of inventory. We'll go up to 8 or 9 or 10 months of inventory, and it won't move the needle at all. May, there are 60 homes on the books to close already, against 55 last year. So unit volume is still pacing ahead of last year and back into the 2020 zone, early 2020, 2019 zone for sure. And that's against 55 homes, as I said, the previous year of May. The median price point now is 2.250. And if I look at the aggregate sales that are going to occur, we're still going to settle around $2 million as the median price point. That's pretty healthy. Well, I wanted to dive in just a little bit to a specific market, too. Watersound Beach is beautiful, and everybody knows that's the most pristine, peaceful beach that you can have on 30A. That's undisputed. But that market seems to have picked up again, and it does that from time to time. Watersound will kind of slow down for a minute. And people go, it's kind of gotten slow. Prices might ease a little bit. And then all of a sudden, last year in May, no homes sold in Watersound Beach. This year in May, 5 are under contract to close in May. We will have closed by the end of May, as it stands today, 12 homes in Watersound Beach against 9 last year. It's beginning to tell me everything I need to know. That when someone comes to me and says, the market looks like it's going to go down, I can't have that conversation with a straight face. The data tells me where we're going, and the data is what I read to you, because the data is all that's going to matter. We can guess at it. We can hope at it, but the data is our reality. Hey, that's the hot sheets for April 20th, 2026. Thanks for joining us, and I'll see you next week on the hot sheets.